Welcome back to the Halftime Report. Traders are answering your questions now. First up, Shannon, got one for you. It is from Siddharth in San Francisco. Do you buy UnitedHealth Group before its earnings?
We like UnitedHealth Group. Their vertical integration strategy is working very well. We're moving into, as Joe mentioned earlier, we're moving into a Democratic House of Representatives. And so the threat of repeal and replace is essentially non-existent. And we've seen on the ballots in November, we saw several states have expansion in Medicaid. So we think all of those things lead to a buy rating for us on UNH.
Okay, thank you. Thanks for the question as well. Joey, got one for you now.
Yeah.
It's from Don in White Bear Lake, Minnesota. Boston Scientific, what do you think of it as a long-term stock, 5 to 10-year holding?
Well, 5 to 10 year, that's a tough one, but it's $39 back in October. It's about $34.66 right now. All of the medical device names have pulled back. I like most of them. I think Boston Scientific will be okay. I think the upside is limited to about a $40 stock. Other names that I would favor over that would be Edwards Life Sciences. I like Baxter. I also like Stryker, but they've all come down. And then, you know, my favorite, that's PKI. That's $77.
PerkinElmer?
Yes, and that's been a loser. That has been a loser for me. But the medical devices themselves, longer term, I think.
All right, Mr. Tepper.
Yeah.
Ron in Fargo, North Dakota. Gilead. What do you like of Gilead in 19?
A little too speculative for us, but it is all about rate of change. They have been, they've seen sales decline since 2015. A lot of people are expecting this to be a trough for them. Hopefully that's the case. They are very strong in the HIV market. However, I believe it's just pure speculation at this point, so we prefer Celgene.
Okay. And last but not least, Jimmy from Mo in Abu Dhabi. Caterpillar. You sold it.
Yep.
Is it a buy, though, now? When did you sell it?
I sold it last week. Sold it at 123, so it's up about 2.5% since then. I will be back in the stock, but I got to be clear. I think you're going to have a lot of bumps in the road to a China trade deal. And as those bumps happen in January, February, I expect the stock will be high beta to that sort of news, and it'll come down below 120, and I expect to be in it again before the first quarter is over.
Okay. Got one more for you, Marks from Ron. What happened to Twitter? Can it be helped?
We love the stock. I mean, I think it's one of the best social media stocks out there right now. It's trading at a PEG ratio of 0.75, so you're paying nothing for growth. It's all about user engagement with Twitter. It's not really about daily active users because they're actually trying to shut down fake accounts. So it's all about increased user engagement. People log into Twitter maybe 10 times a day, Facebook once a day. Increased engagement leads to more advertising revenue, which is good for the stock.